Hi, I'm David Leiter, and I'd like to invite you to a very special event I'm doing in Miami Beach, Florida, this August 10th and 11th, 2025, at the historic Bath Club, Private Members Club. And the event is called Professional Investing Boot Camp. And it's really about how to spot the great compounding investments that can build your wealth over time and avoid the myriad of bad investment offerings that you see constantly and that you'll see for the rest of your life. This event is for people who have always wondered, how do professional investors, like you see somebody like Warren Buffett, and he has extraordinary returns over 19% a year for 58 years. How did he pick those companies? How did he know that those companies were going to work? Or if you look at somebody like Howard Marks or Ray Dalio and you look at their records and you say, how did they identify these companies? So there's clear criteria that they know that increases their probabilities. Nobody's 100% right, even Warren Buffett or Ray Dalio or Howard Marks. They're not always right. But when they're wrong, they lose a lot less or very little or not much at all because they know they have a framework for how to think about investing. That's what we're going to do for 2 days. So if that type of thing is interesting to you, you should be there. There's a link below on how to register. Now, I've been investing since the mid-1990s. I first worked on Wall Street at Credit Suisse First Boston. It was called Credit Suisse First Boston back then. It was one of the major investment banks in New York City and in the world. It was up there with Goldman Sachs. And I worked on the syndicated finance trading desk. And that was the old trading desk like you see in the movies with the turrets, and there were rows of people and the phones were ringing. You grabbed the phone and there was transactions going on. And it wasn't in equities or stocks. We were dealing in debt, in floating rate loans. So the bank would lend hundreds of millions of dollars out, and then they would send it to the syndicated finance desk where I was, and we had to sell those loans off to other banks, similar to a syndicated real estate deal, which you may be familiar with. You take the whole deal and you sell off parts to other people, and they participate. In the process of doing that, I was trained in credit training, how to evaluate companies, how to evaluate businesses, and I was in the middle of the dot-com bubble. How many of you remember in the late 1990s, the dot-com bubble? Stocks were going wild, emotions were going crazy. And at that time, I had been reading Warren Buffett, I'd been studying, and I was learning a lot, and I still got caught up, being a newbie. I got caught up, bought a stock, Healthion. I wrote it from 63 down to 11. That was super painful. How many of you lost money doing something in stocks or in real estate? And it's really painful. The problem with it also is why you don't want to lose money is when take big losses that are painful is that it changes you psychologically and you don't look for opportunities anymore. You become fearful, you don't take action. This is bad, and you're going to now miss all the other opportunities that are there. And I have news for you. The great opportunities are not usually widely promoted. So you have to train your brain to be a contrarian thinker. We're going to talk a lot about this at the event. What we're also going to do in the event is we're going to talk about, there's really two great aspects to being a great investor. First, you must understand, and this is from Benjamin Graham from The Intelligent Investor, and Warren Buffett said, business schools should teach this, and they don't. No business schools teach this, but we're going to teach it for 2 days. First of all, you have to understand markets and use markets to your advantage. The stock market, public markets, go wild, and there's emotions playing out in real time. And most people treat the market like a casino. They go in and they try to buy stocks, and they make money, and it goes up, and they sell them. And they think, wow, I'm a genius. Then they do it again, and maybe they make money, and they think they're even more of a genius. So they buy more, and then they lose it all. I've seen this happen many times. And then people walk away and say, the market's a casino. I'm not going to participate in that. It's all rigged and all this other garbage. The fact is, stocks are only pieces of businesses. You own a share in a business. So if you were to buy a business, how many of you own your own business? If you were going to buy a competitor's business, you wouldn't buy it like that. You would look at their financials. You try to understand the business. How do they make money? And there's many companies we can't understand. They're very competitive and challenging. So you have to stick within your circle of competence into what you can understand if you're going to pick your own investments. So that's one aspect of it. So you can use the market when the market goes wild on the upside or the downside, especially on the downside, and prices get low and you understand the businesses underlying, you could buy great businesses at great prices. And that's how you get rich in stocks. And Warren Buffett has said that's how he's gotten wealthy in stocks, him and Charlie Munger. Now in real estate, we're also going to look at those markets and how we can take advantage of those markets. They work a lot slower because it's not an auction market live. You don't have a price ticker symbol on that apartment building on the corner that says the price every day. So it's a transaction, it takes more time, and it can be hugely profitable if you know what you're doing. I've owned real estate since 1998. I've been investing in stocks since mid-1990s. So I have almost 30 years experience in stocks. And I was retired off I sold my management company. I had a management company that managed properties for myself and others. And I was basically retired. And I started doing this because I was disgusted with, I saw really bad investment offerings over the years, people pitching wild things. A lot of them were private deals, like a friend or a friend of a friend would pitch people and say, hey, I got this startup. It's going to be amazing, blah, blah, blah. People believed and put money into it. And they were really, a lot of them were, some were just garbage and some were just low probability. The problem is the people were likable. People invest with people they like. This is not a good strategy. It's of course important to like somebody, but it's only one piece of it. And so these things were happening. People were losing a lot of money. Some of my friends had a lot of money. They lost it. It wasn't a big deal for them. Others, I saw a lot of people, and when I started writing about this topic, I talked to a lot of people on the phone. I have people in my groups, and they would tell me stories, and people that did not have a lot of money would lose 25, 50% of their net worth. Had some people lose their entire life savings in bad deals, one particular real estate deal I'm thinking of. And so these things were horrible. So you can take these 2-day event here and learn these skills. It might just be a huge thing for you to avoid losing your money in something really low probability, which you don't want to be doing. And you might actually find that once you might identify some great investments. I don't know what that value of that could be to you. For me, I always loved investing because I thought to myself, if I got good at this subject, I could do one time, I could make a good decision and I could get paid for the rest of my life. Think about that. If I bought a great apartment building and I recognized it, which I did, and I still have apartment buildings I own in New York City to this day that pay me every month and that I live off of. And those investments send money to my bank account. Now I have to keep an eye on them. No real estate is completely passive, despite what they tell you, unless you're a limited partner in a deal and you don't have to do anything. But many of those deals don't work out very well. You have to find a very reputable person who's syndicating, a general partner. You could also buy a great company, a stock, and you could get paid for the rest of your life if you pick that right. So the value of this skill is tremendous. So I spent my time learning it and doing it over and over again. And I wasn't teaching it. I do it. If I wasn't doing this event, if I wasn't talking to people, I would still be doing it all day, every day. I love it. I've also come to love, and it has become my mission to help people get smart. I was so pissed really at people would promote stuff that was just crazy, and they thought the arrogance of somebody who made a little money in something and now they're raising money and telling you they're investment experts, and these people were not. And it's so widespread, it's ridiculous. You have people on Instagram or various things, they have a lot of followers. And so people think, oh, they must be smart. They have a lot of followers. And really, they mislead people. And they might look good for a very long time. And then all of a sudden, many people in real estate looked really good. From 2010, 11, 12, up till 21, 22, they looked really good. And then they lost a lot of money for their investors and themselves. You don't want to be that person. And then they have to back up and start over. So the pitch and hype machine out there is relentless. And unless you know what you're doing, you're going to get sucked into it at some point. So that's what we're going to do for 2 days. And you're going to walk out of there smarter, shrewder, more empowered, knowing what a great investment is and knowing the probability of low investments and what they look like. And I think you're going to have a lot of light bulbs go off. So Again, we're going to be in Miami Beach, August 10th and 11th. The club is beautiful. We serve lunch to you every day. We're there all day into the evening. I have two very special guests and maybe more. One is Mark Faber. He's a legendary investor, writes the Gloom, Boom, Doomin' report. He was on TV for years, Barron's and everything. He's always a contrarian thinker. He has an amazing historical perspective. He's, extremely wealthy, lives in Asia, and he's an international investor. He's going to give you perspectives on markets, what's he's doing now, what's going on. And by the way, that's the third piece of the event. We're going to talk about markets. We're going to talk about valuing assets. And then we're going to talk about that's real estate and stocks. And we're going to talk about, and private businesses, by the way. And we're going to talk about what is current, what I'm doing now, what I see, what's the opportunities for the future in the coming years. And so some things are obvious, some aren't. And the thing is about markets is when everybody knows it and it's so clear, it's already priced in. You cannot do that at that time. So this is the thing that really trips people up. They think, I understand AI, but it's priced in a lot. So where's the opportunity with an AI or other things that are happening that are maybe not realized yet? Now, I have a very good track record with my groups. You can read on the page. I told them many things that happened before they happened that I saw, and I've trained my brain over the years to look for that, and I hope that I will continue to have such a great track record in that regard. But I have had market-beating returns. I've posted my returns to people. And, of course, in real estate, I don't even include that. I've done very well in real estate. I also have another special guest, Joel Seiden, who is a real estate legend in New York. He's not super well known outside of New York, but he's friends with and colleagues with some of the biggest names you've heard of in New York City. And he's just a real guy who has 50 years experience, done billions of dollars of transactions. And I knew him and I talked to him and I got him to talk to the groups, and he's agreed to come talk to you guys about real estate. So we're going to do a lot on real estate, a lot on stocks, and really the investing mentality and philosophy and framework is the same for both. It's not different. It's just some different dynamics to the execution, but it's not different. It's the same thinking. So join me in August. There's a link below. Register now. Depending on when you're watching this video, the investment required will go up over time, but it's a beautiful place. We have great lunch, everything there for you for the 2 days so you can stay. We're gonna have hotel room blocks. All of that will be sent to you, and we'll have a great time in Miami Beach this August. I'll see you there.